Hi friends and listeners, I am Sanjay Bunch, life member of Chamber of Tax Consultants, also partnering the law and business advisory firm of Crawford Bailey and Company. For Chamber of Tax Consultants to celebrate this year as a centenary year is a momentous occasion, and I am proud and privileged to be part of this non-profit organization sharing knowledge across spectrum. Today I want to talk about an interesting topic, social stock exchange with reference to environmental social governance and the way forward. Have you ever imagined that a stock exchange not for profit hungry bulls but for socially conscious organizations that changes community lives where social impact, not just income, is listed, rated and traded also. Welcome to the world of social stock exchange, India's bold step in merging and integrating capital markets with ESG initiatives and social good, thereby achieving not only the environmental social governance targets but also business related continuity and sustainability goals. Social stock exchange, friends, is not a separate stock exchange, but it's one of the segment of the existing stock exchange like NSE, BSE. Social stock exchange acts as a medium between social enterprise and fund providers, helping them to raise funds by selecting these entities that create a measurable social impact and reporting such impact. The crux is that, like CSR, entity must target underprivileged, undeserved segment of the population and regions which have recorded lower performance in the development priorities of schemes promoted by central or state governments. There are broadly two categories: non-profit organization, that is NPO, or for-profit organization, or FPO. Now, there is some eligibility criteria also prescribed. A non-for-profit organization such as a registered public charitable trust under the Public Charitable Trust Act, or a society registered under Societies Registration Act, or a Section 8 company registered under the Companies Act, are eligible to be part of or register themselves with social stock exchange as a social organization. Under ICDR regulations, all NPOs which require registration with the social stock exchange must have a existence of at least 3 years, must possess valid certificates under Section 12A, 12AA, 12AB and Section 80G of the Income Tax Act, must have minimum rupees 50 lakhs as an annual spending and minimum rupees 10 lakhs of fund in the past year. Under ICDR regulations, listing is not compulsory for non-profit organizations. Only thing which is required is registration with the social stock exchange. Post the registration with stock exchanges, a social organization or an NPO may raise funds on social stock exchange either through issuance of zero coupon, zero principal instruments, through private placement or public issuance, donations through mutual fund schemes as may be specified by SEBI, or through any other means that SEBI may prescribe from time to time. There is another mode of raising finance which is a structured mode of finance, and it can be done through raising development impact bonds, DIB, through the structured finance means. Development impact bonds can be issued only after completion of socially inclined or eligible project by the social organization concerned, which meets the pre-agreed social matrix and pre-agreed rates. The service providers of the project receives grants from the donor, who is called as outcome funder. What is required is measurable demonstration or impact assessment of the initiative undertaken by the social organization. Corporate foundations, political or religious organization, Professional or trade associations, infrastructure and housing companies are not eligible to be identified as a social enterprise for the purpose of registering with social stock exchange. There are disqualifications also. A social enterprise shall not be eligible to register with social stock exchange if any one of its promoters, promoter group, directors or trustees or selling shareholders or officers are debarred from accessing the stock market by SEBI, or they have been declared as willful defaulter or a fraudulent borrower by banks, or any one of them is categorized as fugitive economic offender. Second category is for profit organizations, social organization, which can be a company, normal company registered under the Companies Act, or a body corporate set up for generating profits. No registration is required, unlike non-profit organization with the social stock exchange. Funds can be raised by compliance of ICDR regulation, LODR regulation, AIF regulations prescribed by SEBI, and funds can be raised by issuance of equity shares on main board, SME platform, or innovative growth platform of stock exchange. Issue of equity shares to an alternative investment fund, including social impact funds. Issue of debt instrument is also allowed for profit organizations. To sum it up, it's another opportunity not only for sustainable growth, but also ESG conscious investors, NPO fundraisers and professionals to correctly guide the path and walk through the process of listing or registering with social stock exchanges. Thanks. I hope you like this video.